Hello, welcome to Save U.S. Taxes Legally. My name is Sally Gibbon, and I want to teach as many U.S. investors, U.S. business owners, U.S. entrepreneurs, U.S. franchise owners, and also U.S. 1099s how you can save taxes legally. Most people think this is not true, but it is true. So let's get started. The Spendthrift Trust is legal. It's in the IRS Tax Code 643B. You're going to save in four very important ways. Number one, you're going to save taxes year after year, generation after generation. You're going to leave a legacy. Number two, you're going to keep your information 100% private. When I started as a real estate investor, they told me that I need to have an LLC for each one of my properties. They did not tell me that 40% of LLCs, S Corps, and C Corps get sued every year. Anyone can go online to the Secretary of State or the Corporation Commission of your state and research the LLC, S Corp, or C Corp by its name, by your name, and get all the information. Number three, talking about lawsuits. All lawsuits become frivolous and go away. It's an amazing thing. All your assets are in the titanium vault and no one can come after you. Number four, I said this earlier, but you're going to leave a legacy for future generations. Now, I wanted to help as many people as people save taxes. Let me go to the next page. Now, this is 2026 federal income taxes. Most people are unaware there's 7 different layers from 10% to 37%, and there's 4 ways to file your taxes. Most expensive way is filing single, then married, then head of household, then married filing separately, and then the cheapest way is married filing jointly. Now, on January 1st of 2025, the IRS quietly changed married filing separately as same level as single all the way up to 35% tax bracket. Just to take in the middle at 24%, if you're married and filing separately, your taxes start at $105,701. But if you're married filing jointly, your taxes start at $211,401. If you get nothing else from this presentation, please file jointly. Now, if you make $100,000 gross in 2026, you're going to save $15,040. Or if you're head of household, you'll save $13,410. Or if you're married filing jointly, you would save $11,504. This came from a presentation in Arizona. State income taxes in Arizona are 2.5%. So if you're single or married filing separately, you would save $15,416. $100,000 living in Arizona would be $13,745. Married filing jointly would be $11,701 for the year. At $200,000 gross in 2006, it makes a difference, even a bigger difference. If you're single and married filing separately, you would save in federal taxes $36,538. Head of household would save $34,498. Married filing jointly would save $30,081. Now, I live in North Carolina, and our state income taxes are 4.25%. So if you're single or married filing separately, you would save $38,090 for 2026. If you're a head of household, you would save $35,964. If you're filing married jointly, you would save $31,359. Now, if you are an attorney or a lawyer, you're probably thinking this sounds crazy. If you have not read Scott Law, please go home and do that homework. If you're a CPA or you talk to your CPA, I can almost guarantee you they're going to talk about the IRS opinion letter or memo that was dated August 9th of 2023. The IRS literally says they do not like tax code 643B. They do not like the irrevocable, complex, discretionary, non-grantor spendthrift trust. Well, they're the IRS. That's their opinion. They can't change the tax code. Only Congress can. But all five elements are super important. So let's go over them. Irrevocable means it goes from generation to generation to generation. The Rockefellers Spendthrift Trust is called the Office. It's been around for 7 generations and has over 400 people under the same EIN number or employee identification numbers. Each part of the family does a separate 1041 taxes. Complex. This trust can hold money day to day, week to week, month to month, year to year, decade to decade, century to century. The law firm I work on behalf of inherited a trust that was started 303 years ago before we were a country. Our current tax code went into effect February of 1913. It was supposed to be around for 10 years because the federal government was broke. Unfortunately, we got involved in World War I, and the super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys, made sure they could save taxes. Well, if they can save taxes, we can save taxes. The third element, discretionary, means whoever is a trustee or trustees can make all the rules for the beneficiaries while they're alive, and then they can decide how they're going to leave their estate for the next person. Now, 97% of the trusts sold in the United States are what my mom and dad had, the family trust or the living trust. My mom and dad were the settlers or the grantor. It was revocable. So as soon as both my mom and dad passed away, that trust avoided probate and then it dissolved. With this trust, it's a non-grantor. You will have someone who will never be a trustee, who will never be a beneficiary, sign up to be the grantor. You will need their social security number. This is not a speed bump. They will sign up and sign themselves away and will have no access to anything in the trust. And then the last element, spendthrift. This has been in front of the United States Supreme Court on 2 separate occasions, and it's won both times. You can't get more legal than that. Now, the law firm I work on behalf of was founded 78 years ago by a Harvard law professor. Paul Benson wrote 5 specific trusts to save specific taxes. Today, we're going to talk about the business trust to save 1099 income and state federal income and also state income taxes. And then also the beneficial trust for investors to stop paying taxes on profits. The other 3 trusts he wrote, there's a charitable trust that several of my clients have started their own charities. Then there's the mineral rights trust. I've only sold one of those when my beneficiary clients inherit his granddad's horse farm in Oklahoma. On the farm, there are 6 oil wells. That's the only one I sold. And then the 5th trust is a senior trust who's over 65, is incapacitated. Maybe they have dementia or they've had a stroke. So let's get into this. The business trust is for all U.S. business owners, entrepreneurs, franchisee owners, and 1099 income earners. If you're making at least $100,000 gross before anything comes out in 1099 income, you will save 5 figures in taxes. I don't care if you're a state that doesn't have state income taxes or not have state income taxes. This is an actual client. He called me on January 3rd of 2025. He was in the military. He now works as a defense contractor, gets paid 1099. He knew in 2024 he made $150,000 and had nothing to show for it. He was figuring to make more money in 2024 to 2025, but we just used the $150,000 to give him a baseline. His gross federal taxes were $28,847, with the saying that he could save 90% on his federal income taxes would be $25,962. Virginia state income taxes is 5.75%, so that would be an additional $8,625. For the full year of 2025, he would save $34,587. He could put this back into his business. He could pay off his mortgage. He could buy a new vehicle. He could take his family on a vacation. He could give to his favorite charity, or he could save for retirement. This client, his name is Tim, he's planning to take that $34,587 and put a down payment on a house in Virginia. Now, my personal story, so you have it. I became a real estate investor in 2018 when my mom got sick 2,000 miles away from home. I was living in Phoenix, working as a Medicare broker. My mom and dad lived in Goodyear, Arizona, 25 miles west of Phoenix. They drove from Goodyear to Charlotte for my oldest nephew's wedding. I had requested the Friday before the wedding and the Monday after the wedding off, but if you know anything about Medicare, open enrollments from October 5th to December 7th, and they denied me. Third thing that happened during this time, my brand new 3-week-old vehicle, 2015 Hyundai Veloster with a moonroof. I'm driving to be at work at 7 o'clock in the morning on Indian School Road. I'm the second car through at a green light when some idiot runs a red light and T-bones me on my passenger side. And he had no insurance. So when my mom got sick, she had septic in the blood and she was on a ventilator for 13 months and a hospital for 15 months. So I bought this house in Rocky Mount, North Carolina, the contract for $20,000. It was going to go to auction at $50,000. July 2020 is the middle of COVID. I knew the $30,000 at 24% tax bracket would cost me $7,140. When it finally went to auction on August 28th of 2021, the final bid was $64,326. Without lifting a hammer, I made $44,326. At 24% tax bracket, I got to save $10,368 on this first property in the trust. Since starting both my business and Beneficial Spendthrift Trust in September of 2020, I've wholesaled 28 properties. I have a crypto bot that is between Ethereum and Bitcoin, so I get paid each time someone buys or sells against it. I have 12 notes where I'm the paper on the house. People pay me their mortgage. I have 7 seller financing houses, and I have 3 rentals, and my friend does my options trading. I pay nothing in taxes. Now, the beneficial trust is going to save you in 5 very special taxes. Short-term capitals are when you wholesale, fix and fix. Maybe you're doing tax liens. Maybe you're doing auction houses. You're selling crypto. You're doing options trading or a forex investor. Interest income taxes are for people who are passive income in mutual funds, in a REIT, if you're doing subject to, or if you're doing the BRRRR strategy. My notes are also interest income taxes, creative financing, seller financing, and forex. Yes, forex investors get taxed twice, capital gains and interest income taxes. You need Beneficial Spendthrift Trust. Dividend income taxes are just like federal income taxes, and that affects you if you're in the stock market, you're a day trader, you're a futures trader, you're a commodities trader, or you're living on dividends. Rental income taxes. Yes, you can move a property with a depreciation schedule into the trust. Yes, you can move a property with cost averaging into the trust. But if you have short-term rentals like Airbnb, vacation rentals, 3 doors, 5 doors, 10 doors, 20 doors, 100 doors, maybe you're in multifamily or apartment buildings, you have commercial property, or you're doing Airbnb arbitrage. The only one that's not on here is royalty income taxes. They're taxed a little bit less, between 10% to 35%, 7 different levels. So if you are an actor, an actress, a musician, an author, or artist, have patents, if you have intellectual properties or copyrights, you would save that year after year. So coming down this way shows if you make $50,000, how much you would save. If you make $100,000, this is how much you would save that way. Year after year after year. Now, long-term capital gains, whoops, what's wrong with this slide? Long-term capital, bad Sally. Long-term capital gains are when you sell business, sell an investment property, or a baseball card. This family was selling the restaurant, a family restaurant, a 42-year-old family restaurant, as is for $3 million. The son saw my TikTok video. His father had never been on Zoom. I explained to him at 15%, he would not have to pay $450,000 on April 15th of 2024. We were selling it March 30th of 2023. So we're talking a year and 1 month afterwards. At 20%, I'm not a CPA, so I was not sure. At 20%, he would save $800,000. Jim, the owner of the restaurant, asked me to call his business broker, Sam, to tell him that they were going to start the trust and change the name. When I told Sam about there's a business trust and also a beneficial trust, he got the business trust. He then sold the thing, and then he told the gentleman who was buying the restaurant it was going to be his 7th restaurant in 3 different states and saved thousands of dollars. Now, one of the things that the trust also does is they say 3.5 million seniors in the United States are being affected by the IRMA surcharge that affects Part D and Part B of Medicare. Every October, the IRS goes back 2 years to look at all 1040 tax returns and add everything together. How much you gain from Social Security, how much you gain from your pensions, how much you gain from wages, how much you 401k withdrawals, SEP withdrawals. Maybe you're making capital gains, interest income taxes, dividend income taxes, rental income taxes, or royalty income taxes. They add it all together, depending if you're single, and make this is 2025 numbers, $106,000, or if you're married jointly, you're going to make $211. So this is the chart for 2025. They have not given out the 2026 yet. So I just helped a couple who both were paying married jointly. They were making $405,090 on Part B and an additional $78.60 each because they were making too much money. This trust, it doesn't matter which trust you have, you won't have to pay the IRMA surcharges. Now, if you would like to set up a 30-minute tax breakthrough session with me, it's www.thetrustisyou.com/scheduling. I do have a free class on the Great Discovery. If you go out to sallygimmon.com, you're going to register as a free learner, and then you're going to go to Save U.S. Taxes Legally. After you watch the video, you're going to get 3 articles from Forbes magazine I did not write. You're going to get 2 pages of case law to research this to your heart's content, and then examples of clients saving thousands of dollars. The reason I set this up is because when I was sending this to potential clients, I was killing their email box. So this is an easy place for people to get things. My goal is to teach as many U.S. investors, U.S. business owners, U.S. franchisee owners, U.S. entrepreneurs, and also U.S. 1099 incomers how they can save taxes legally. Learn from my mistake with my $94,000 taxes. I'll never have to pay taxes ever again. Thank you for watching, and I hope you have a beautiful day. Take care.